Good morning. In 1981, when Oregon legislature removed the interest cap on consumer lending, they had no idea that they were opening a Pandora's box. Indeed, the market worked reasonably well for a period of time, compressing interest rates. But then a national movement of title lenders and payday lenders came to Oregon and exploited that cap, and our families have been wrestling with triple-digit interest ever since. Rates of 300, 400, often in excess of 500% interest. The type of rates that devastate families, the type of rates that pull them into a financial vortex, and the type of rates that then break those families either monetarily or create other stresses that affect them, and those stresses all reverberate for the children, for the family, and for the public. So this is a lesson that has been learned many, many times in the course of human civilization, that high interest rates damage communities. So we are here to say that enough is enough, and it's time to close the lid on that Pandora's box. And the question becomes then, what will happen here in Oregon if we take no further action? And we do have a lot of information about what has happened nationally. In Texas, a payday loan company set up a subsidiary company to be a broker, and the subsidiary charged broker fees, and that was a way to bypass the laws that had been set up, and it's an issue we need to pay attention to here. In Pennsylvania, Advance America set up a choice line of credit and charged $150 per month access fee for consumers to access that line of credit. Those are lines of credit are what are referred to as open-ended loans that are allowed under consumer lending here in Oregon. In Illinois passed the Illinois Payday Reform Act, and it was implemented in December 2005, and it established consumer protections on loans of more than 36%, and companies quickly switched to longer-term installment loans and promoted them as a cheaper option. Cottonwood, doing business as the Cash Store, offered 140-day loans with installments that were interest-only, followed by a balloon payment. That would not be allowed under our consumer lending here in Oregon. That will require amortization. But Americash switched to fully amortized installment loans with equal payments at interest just under 300%. And indeed, what we found in Illinois, that after adoption of the Payday Loan Reduction Act, consumer lending installment loans went from an average of 74% to 387%. So the point here is that unless we plug the loopholes, we are going to have the same impact here in Oregon, and we will still have triple-digit loans, and we'll have them under a different name in a different place. The consumer loan industry has told me that they are very interested in finding ways to plug these loopholes. Other than having an interest rate cap, I've repeatedly asked them for ways to do this, and there is still time for them to bring those forward, but to date, we have no solutions on the table that would do that. So, in closing, I simply want to say that this coalition has come together on behalf of Oregon's families, and we are determined collectively and finally to close the lid on triple-digit loans here in the state of Oregon. Thank you.
My name is Gwen Curran. I'm an AARP volunteer. I'm 74 years old, a retired teacher, and I'm representing AARP and its 500,000 members across the state. AARP members in Oregon feel strongly that these facilities should not be so easily able to prey upon our state's most vulnerable, including seniors and struggling families. In a recent poll of our members from all parts of Oregon and all backgrounds, urban and rural, Republican, Democrat, and Independent, boomer and senior, and of varying incomes and education, nearly 8 in 10, or 76%, reported their strong support for capping consumer loans at 36%. AARP Oregon members say payday loans don't pay, even though some may face stagnant retirement incomes, rising housing and medical expenses, They see that these high-interest consumer loans are an extremely risky and poor alternative that jeopardizes the economic security and peace of mind of Oregonians of any age. And they create a vicious debt cycle that's hard to break. I was just working with a group of our other AARP volunteers on an affordable prescription drug project last week and heard a story from one of them that represents this sad reality. A volunteer's 26-year-old daughter, a recent single mom with 2 kids, ages 4 and 2, apparently started with her first payday loan to help cover some spiraling utility costs. Then it was a deposit to be able to move into a different apartment after she separated from her husband. Still embarrassed to go to her parents, there was another loan to cover the previous loans. Throughout all this time, she didn't want to tell her parents or ask for their help until just recently, when things piled up so much that they had to come in and loan her money to help cover the repayments. AARP members feel we should and must do better, and we urge our Oregon lawmakers to, like Speaker Merkley, to pass House Bill 2871 to help protect consumers like this young family and to help ensure secure financial futures for all Oregonians of all ages. Thank you.
Thank you. I'm Paul Swanson, Bishop of the Oregon Synod of the Evangelical Lutheran Church in America. That's a gathering of 116 congregations throughout the state of Oregon with a membership of about 45,000 persons. Our church, the Evangelical Lutheran Church in America, has taken a very strong stand around the issues of economic justice in a social statement in 1999. Certainly brought to our attention and to certainly the directions of our church working for economic justice, and certainly the issue that is before us is one that very much falls in that category of concern as we care for the people and certainly for those who are most vulnerable in our society. Economic life pervades our lives in the work we do, the income we receive, how much we consume and save, what we value, and how we view one another. The current market-based economy does that to an amazing degree. Many are prospering, at the same time others continue to lack what they need for basic subsistence. We in the faith community believe God is at work in the economic life of our society by our actions and decisions. Economic activity is intended to be a means to which God's purposes for humankind in creation are to be served. There's a dynamic tension in the economic activity of our society. Amidst the complexity of economic activity, there is the concern that what benefits people in one area, one sector of the economy, may harm those in another. One of the responsibilities of public policymakers is to assure that justice and fairness prevails in this important aspect of human existence. I'm here to speak strongly in favor of the passage of House Bill 2871. This legislation will provide for a policy that will assure the common good and assist in protecting the most vulnerable and powerless in our society. Consumer loan usury of 3-digit interest rates is an affront to basic human dignity and a predatory practice to the most financially vulnerable persons and families. A lending cap of 36% will provide a common law and standard to all lenders with a consumer finance license. We who live in Oregon take pride in the independence, self-sufficiency, and progressive nature of the people of this state. Enactment of this legislation will provide an avenue of hope and recovery from the demeaning and depersonalizing experience of consumer loan usury. Passage of HB 2871 is essential to provide a beacon of hope and life with escape from a debilitating and demoralizing financial practice.